Welcome to another edition of the program Capital Market. It's good to have you join us. I'm Temple Ashadio. We start off immediately with the markets review, starting with equities. As always, where all-share index for the week contracted by 1% in spite of some 3 weeks of gains that we saw across the markets this period. We saw the week-to-date performance shedding some 118 billion naira as equity capitalization of the Nigerian Stock Exchange settled at 13.05 trillion naira. Profits taken in Boa Cement and, of course, Stanbic IBTC, which shed some 7.3%, and Union Bank, which was down by 8.2%, were the key drivers for the decline that we saw in the overall performance of the market. If you look at the activity level of the market, it was down by 29%, and, of course, coming in at 1.469 billion with a value of some 23.55 billion naira, which actually rose by some 4.7%. Deals for the entire week put at 22,911. If you look at the top traded stocks for this period, in terms of volume, FBN Holdings was up by contributed some 175 million units of its shares to that. Guarantee Trust Bank represented by some 154.9 million units, and Zenith Bank did some 125.8 million units. Dangote Cement this week only contributed some 6.3 billion naira to the entire value of transactions that we saw in the market, while Nigerian breweries, with some cross dealings that we saw during the week, accounted for some 5.1 billion naira worth of transactions in the markets. And Guarantee Trust Bank contributed 3.8 billion naira in terms of value to what we saw this week. Sectoral performance, we saw banking stocks declining by 1.81%. Consumer goods segment of the market appreciated by some 26 basis points, thanks to Dangote Sugar and a couple of other companies that we have in that sector that has been blazing the trade. And, of course, investors have been betting on lately due to some dividend, potential dividend payments in view. Now, industrial goods side of the market contracted by 3.14%. Said earlier that there was a decline of 4.8% on Boa Cement. That is as a result of the capital appreciation that we are seeing, given fueling some kind of profit taking on that side of the market. And, of course, we saw a bit of that on Dangote Cement as well. Now, insurance side of the market, in spite of some positives, gains around ICO Insurance was down by 67 basis points. Oil and gas was negative by 1.35%. If you look at the NASD OTC market, that was a positive, was up by some 13 basis points this week. Market capitalization settled at 508 billion naira. We saw activity level quite optimistic. Volume was 2.07 million units, and, of course, valued at 146 million naira. All this took place in 34 deals. Niger Delta Exploration Production Company was the largest contributor in terms of value of transaction, which was 126 billion naira, while CSCS, your market depository, contributed some 1.14 million units of its shares to the entire transaction we saw on that side of the market during the week. Look at the debt and currency side of the market. Bonds for yesterday, we saw 34 deals. Of course, this period we saw bullish transaction for the entire week. Average yield fell by 9 basis points to 10% specifically. And, of course, interest was at the mid-term bonds. Of course, strong buying sentiment was what we saw on that side of the market. If you look at the treasury bill side of things, treasury bill, we see bearish outing at the secondary side of the market. It's not new. This is the sentiment that we've been seeing lately. Yesterday was no difference because it was more of retail participation that we saw on the side of the market, in spite of the 70 billion naira worth of open market operations auction that the CBN carried out during the week. And one of the reasons why we saw that sort of lackluster performance in the market this period was as a result of the FX retail FX auction that the CBN also carried out during the week. That had a way of dampening the interest of investors in the markets. Now, with the expiration of the 60-day period granted to listed companies till May the 29th, 2020 for the filing of their 2019 financial statements, that's owing to the impacts of COVID-19 on auditing, the markets closed with the receipt of some of these earnings this week. Now, some of the companies we have singled out to analyze are the Aviation Stocks, which includes Skyway Aviation PLC and Nigerian Aviation Handling Company, that is NACO. But outside of the aviation sector, we have Dangote Sugar Refinery, which is also paying out some impressive dividends, 1 naira 10 kobo to investors. And of course, joining us now for analysis on this particular companies or stocks is the Segun Tumbi, who is the team lead for research at Nigerian International Securities Limited. Segun, thank you so much for joining us on the program this evening. Let's quickly go spot on the aviation sector. Two companies on the radar, not the airlines now, but the aviation handling companies there, Saco and NACO. What do you make of their performance? Let's start with NACO.
All right, so for NACO full year, we saw top line growth. Quite flat. Or the bottom line, we saw a massive, impressive jump in the bottom line. So basically what we saw there was cost efficiency across board for both NACO and Saco. But then on NACO here, we saw the management was fantastic. This led to the bottom line gain that we saw. We saw a reversal also, which seemed like a one-off though, of credit losses, close to like 300 million. In the books. So that actually pushed the bottom line, and with an EPS in the range of say 33 kobo, thereabouts, it was just sense for the company to actually give back to investors, apparently by actually giving out a 30 kobo dividend at the end of the day.
So that amounts to 487 million naira. One would really be wondering, do they have some kind of retained earnings enough to be able to push out those funds or something?
Yes. For now, yes, the books are looking good. Full year 2019, I mean, we should also know that this was basically before the pandemic issue. So handling of aviation cargo, throughput at the airports was still fantastic. But then it now begs the question, what do we see going forward? So are they going to still retain those numbers heading into Q1, Q2, especially with issues around lockdowns and airports being shut?
And of course, we know that there are some developments to reopen the airports now, even though there are several clauses involved in that. But quickly, let's look at Skyway Aviation. This is Saco. It was just about this period last year that Saco got listed on the Nigerian Stock Exchange. I'm not sure we can recall now how successful their initial public offering, the IPO, was. But eventually, they got listed. And of course, now we know that they're declaring some 16 naira 50 kobo thereabouts in dividend after posting some 7.66 billion naira, which is a jump of 24.9% top line. But when you look at the bottom line, I need you to explain to us what actually transpired there, enough for them to be able to pay or propose this huge amount of dividend. Post-tax profit is actually 446 million. Naira. Pre-tax profit is just 545 million naira. What do we know about what is fueling this this proposal of such a high dividend of 16 naira 50 kobo? Tell us.
All right, so the dividend actually is 16 kobo 50, right? And that comes to roughly about a dividend payout, the north of 40%, thereabout. Just like NACO, right? The sentiment in the equities market right now is not really there. If you get what I mean, we've seen that trend of downward bearishness all into April, and the market is just trying to rebound and just come back up. So what you see with Saco, just like NACO, also is, yes, there was this cost-effective management across the books, and also just to be able to retain investor confidence. I mean, how best can you let your investors have the understanding that, okay, yes, things are looking good, or things did look good in full year 19. I mean, because these are numbers regarding to full year 19. Things did look good coming from where we are. Remember also, Saco was coming from a loss position into profitability.
Sure.
You get, so that brought about this 600 plus jump in PAT. So apparently from the earnings at 33 kobo, thereabout, paying out 16 kobo, I mean, it's a fair deal for investors that are stuck with them.
But with these numbers we have before us, can we really say they are in profitability already?
Well, like I said, full year 20 will do the judgment, apparently. And from our own point of view, we really don't see them performing that magic for guys in that sector.
Why?
I mean, because definitely when you look at airports have been shut, how many weeks now? And by the time the borders and everything gets reopened and the economy gets reopened, how much of those handlings and those flow
can they really
do for the little time remaining in full year 20? So really, it's really for me, for investors, it's for them to actually trade with caution rather. You get it. It's a delicate balance right now in that sector.
Okay, so let's look at Dangote Sugar Refinery. Top line was also positive, 7.12%, at 161.08 billion naira, over 150.37 billion naira that they did in the preceding year. But if you look at gross profits, it was not too good. Cost of sales was on the high side, up by some 10.94%. Selling and distribution expenses, all of this, when you price them in, look at the bottom line. It gives you 22.36 billion naira compared to 21.97 for the profits after tax. And then they are declaring 1 naira 10 kobo. What's your thoughts?
Well, for Dank Sugar, we should not forget the fact that last year, Q4 last year, they talked about a merger with Savannah Sugar Company PLC. And for me, it's a strategic move. It's more of a vertical merger that will not only give them a greater market share, getting into that space, but then it still speaks to the backward integration that majority of consumer goods companies are actually talking about. So when you have close to 32,000 thereabouts hectares of sugarcane plantation, you get to actually feed your refinery, then that, to me, it's a good one. So Savannah transferring all of these assets, you get over to Dank Sugar. And so basically for investors right now, what investors are saying is away from the numbers not being too good. Because for full year, we saw expenses around rental lease pushing expense around there. Also, we saw FX losses come into play, which in the Q1 numbers also had that coming to bear. So basically, like I said, the dividend play right now across companies is simple. We need to keep the investor sentiments positive. And how best can we do that? Give them a portion that is significant enough out of our earnings right now. And that is what is playing out.
They're going to become the dominant player in the industry, in the sugar refinery industry. That's after acquiring some 4 other companies before now. They had acquired Nasarawa Sugar Company, Dangote Taraba Sugar, Dangote Adamawa Sugar, and of course, Dangote Niger Sugar. And now if you have to bring in Savannah Sugar, their objective is to be able to deliver some 1.5 million metric tons per annum. And so, of course, become a global force in the sugar production industry. But let's look at the aspect of competition. Will we still be able to have a healthy competition in the system? Because before now, I mean, it's always been just a few sugar refineries.
Yeah. All right. So in the place of competition, I mean, before the broad market of, I'm just going to digress a little, for the broad market of cement, had this much players struggling in the game, we actually had a dominant force in place. So yes, you get to see, in quotes, that monopolistic tendency coming to play right now. But then it begs for the case for increased FDIs in the economy. By the time you actually see guys that actually have the wits coming to play in the market, you would see the competition grow. You would see, I mean, it's a big playing field, with Nigeria having how many millions of inhabitants in the country. I mean,
so this is like throwing a challenge upon us to get some more foreign direct investment to come into the country.
Exactly.
But we do not know what the timeline is for this for the acquisition of Savannah Sugar. Do we know anything about that?
Not yet.
Okay. Possibly when that time comes, that will be issued to the Nigerian Stock Exchange, and of course the investing public will be able to get hold of such an information. Shegun Tumbi, lead research team person at NISL. Thank you so much for joining us on the program this evening. We appreciate your insights.
You're welcome.
Thank you so much.
Thank you.
Well, of course, the Institute of Chartered Accountants, that's ICANN, is promoting a new form of corporate reporting. Of course, we will tell you what that is and how it will benefit listed companies and the regulators in the market, and that's after the short break. Stay with us. Welcome back to the program. This is Capital Markets. Thank you for staying with us. The concept of integrated reporting is a strategic means of communication between companies and investors with a view to create value and engender cohesion in reporting processes. Now, the Nigerian Integrated Reporting Council is accelerating the adoption of the concept by regulators and listed companies, and this is being facilitated by the Institute of Chartered Accountants of Nigeria, ICANN. Now, the chairman of ICANN's Integrated Reporting Council, Dr. Innocent Okwasa, explains how the new concept can be of benefit to listed companies in an interview with my colleague, Chimeze Obi-Iwagu. Let's listen.
International Financial Reporting Standard concentrates on what we refer to as financial capital. But what the businesses and corporations are employing to create value, because integrated reporting talks about value creation. How does the organization create value? Financial capital is just one capital that organizations use to create value. But there are other capitals. So when you have a corporate reporting that is dominated by financial reporting, it only tells you about financial capital, then de-emphasizing the other capitals, which integrated reporting is now helping us to bring to the fore in corporate reporting.
How does this benefit listed companies and the investing public?
Good. So when you go to the capital market, one of the problems we have in the capital market is information problem. Information problem. We refer to that as Lemon's problem. And that is what arises where the managers of capital have more information than the owners of capital. So the owners of capital are the shareholders, whereas the managers of capital are the board and the top management. So they have more information on the what of the business. The owners who are dispersed, because the nature of modern corporation is that ownership is dispersed. It is not concentrated, and owners are not the one managing the business. So there's always information problem in the market. And this information problem will always lead to a breakdown in the capital market if owners are not well informed about the capital that the board and top management are managing. So what integrated reporting is now trying to do is to bring to the knowledge of the investors this other information that they need to know in order to improve the information problem. We call that information asymmetry in the market. So integrated reporting is going to help bridge the information asymmetry in the capital market.
So how much awareness has been created about this?
Yeah, at the international level, we have the International Integrated Reporting Council, which has done a lot of advocacy, sensitization, because with the people involved, International Federation of Accountants are involved. The corporate reporting regulators of all types, corporate governance like the Financial Reporting Council of UK, the ISB, the US SSB, the GRI. So there's a whole network of corporate reporting standard setters that are involved. And so that awareness is there at the global level. At the Africa level, the World Bank and PAFA, Pan-African Federation of Accountants, also came together to put up Africa Integrated Reporting Council, also to create the awareness at the African level. In fact, they've taken it to the AU, African Union, trying to create awareness among the heads of state and how integrated reporting could be employed at least at African level. And the reason being that Africa is where most of the world's natural resources lie, and there is need for us to improve this reporting through integrated reporting. So that awareness is also there at the African level.
What about here in Nigeria?
So here in Nigeria, this is where the Institute of Chartered Accountants have done a great job, because the Institute of Chartered Accountants led efforts to put into being the Nigeria Integrated Reporting Committee, which, of course, I am the chairman. And we have started engagement In Nigeria Integrated Reporting Committee, we have membership of the Financial Reporting Council is a member, the Central Bank of Nigeria is a member, the NDIC is a member, the Securities and Exchange Commission, Nigerian Stock Exchange, even Association of National Accountants, ANAN, is a member. So we have also a global, and the Institute of Directors are also a member. So we have this influential community that we're building up in order to create the momentum and the awareness.
So in all of this, what is the take of the regulators, like the Securities and Exchange Commission, NICOM, NSC, as you said, and of course the Central Bank?
Good. So because those people you've mentioned are like sectorial regulators of corporate reporting in the industry. And the Financial Reporting Council regulates financial reporting. And by bringing them in there, in Nigeria Integrated Reporting Committee, then we have the national awareness in Nigeria integrated reporting and integrated thinking.
So are they looking at adopting this system of reporting?
Yes, exactly. That's why Nigeria Integrated Reporting was created, to create the awareness and advocate and engage with these regulators so that corporations could begin, listed companies can begin to adopt Nigeria integrated thinking and integrated reporting when they engage in corporate reporting.
So when this concept is eventually adopted, what will change in the financial reporting standards of the listed companies?
Good. So when integrated reporting is adopted, companies' corporate reporting, which today is represented by the annual report, will no longer be financial statement dominated. Because when we talk about corporate reporting, actually, there are other elements which are not, obvious or conspicuous here in Nigeria. For instance, if we talk about corporate reporting, it's made up of financial, it's made up of sustainability, or if I put it in a very broad way, financial and non-financial. So what is prominent in our reporting here is the financial. The non-financial is the one that is lacking. So when companies adopt integrated reporting, they will give also prominence to non-financial, because actually what happens is that it is non-financial that gives context to financial. If you report only on financial that sits within a context, you only see financial, but you won't see the context within which it sits. So integrated reporting will then make companies to show the context within which their financial sits.
ICANN's pushing for integrated reporting amongst listed companies, and of course hoping that regulators will be able to adopt this concept. Well, it's something that we will watch out for. That has been Dr. Innocent Okwuosa, the chairman of the Integrated Reporting Council of ICANN there. But on that note, this is where we draw the curtain on the program. Thank you for watching, and of course, I'll see you next time. I'm Temple Ashaju. Catch you on the show next time. Bye for now.